Welcome to the 30th episode of METACO Talks. Today we're speaking with Jean-Marc STENGER, Chief Executive Officer at Forge, a subsidiary of Société Générale Group focused on bridging capital markets with digital assets. So Jean-Marc, you are in the industry now for over 20 years, I believe. You started at Société Générale in the 2000s, where you carved out a career in the corporate and investment banking arm, before joining as part of the founding team, the Lyxor Asset Management entity, who is managing, I think, at the time, roughly 137 billion. You were a founding member at the time, and you specialized in the company until you reached the Chief Investment Officer position. But surprisingly, or maybe not surprisingly, you ended up moving to a small internal startup at Société Générale specialized in digital assets in 2019, and this is the Forge entity. So Jean-Marc, it's a pleasure to welcome you in this discussion. Thank you for joining. And maybe my first question, and I have a long list here, is how did you make this decision, and why would you move from such an important role in an important entity within Société Générale into something which at the time, at the least from what I heard, was still perceived by a lot of bankers as a bit of a scam or something which would never breach out?
Mm-hmm. Yeah, thank you to METACO for having me today. It's a real pleasure, and hello to everyone attending this webinar. Actually, it's true. I've been involved with Lyxor Asset Management and Société Générale for many years before that. Actually, at the time I left Lyxor, I already was active in the investment field and in this position for more than 10 years, probably even closer to 15 years. So it was a long time to me, and I was anyway considering, the next move. The point is that at this very precise moment, I already had, and that was also the case for a few years before that, numerous discussions with some of my investors, private banks or financial institutions, were coming to us to develop investment strategies on crypto assets, on cryptocurrencies. And this was really the moment I started to dig into these subjects. And since I think I'm a very curious person, I get into the subject and, just trying to understand what were the potential merit of cryptocurrencies and blockchain more generally, and what's new was attached to that. And I very quickly, I guess, realized that this had the potential to completely transform the way capital market could be operated tomorrow. And I thought that maybe trying that within the framework of the Société Générale Group, which is a group where there is a culture of entrepreneurship and innovation. It's strongly in the DNA of the Société Générale Group, was probably a good try, and I gave myself like 6 months. And actually, that's the time frame we needed to actually do our very first security token issuance. At the time, it was a covered bond we did. And actually, I'm in it since there, and it's a bit more than 6 months. No, it's nearly 4 years. So happy to continue this adventure.
Thank you. This is a really interesting migration, I would say, from a very traditional business to very, entrepreneurial venture. A question I have before I get into what you're really doing there and how, what are the pillars that you have technologically speaking, or in terms of market and opportunity. Just a quick question regarding cryptocurrencies. When you started at Forge, did you consider or even try pushing a use case more related to cryptocurrencies, or did you see the opportunity immediately with tokenization in the capital markets?
Mm-hmm. No, very, very clearly, the focus at the time, and it's still the case, is really on securities. Since SG Forge, and we are within the framework of the Société Générale Group, is really involved for its core business in capital market activities and securities. We thought that remaining in this field were probably the area where the group had the most to bring at first, before trying actually to diversify itself into other activities or other assets, cryptocurrencies. We thought that was the most natural way for us to engage into that, but also an area where we see the potential for transformation as the highest, and also where the strategic nature for a group such as SocGen to be involved in this field, meaning the way capital markets and securities could evolve tomorrow with blockchain is also, or were also the most important. So it was a kind of alignment of criteria which made that we decided to focus there, and again to be there as we speak.
How difficult was it to sell this story to Société Générale? You know, we at METACO, we're facing banks all day long, and some of them, for some of them, it took 2 or 3 years to get an alignment internally around something related to blockchain. Was it easier for you? Maybe you had the right contacts or the right levers to pull. How did it go?
Yes, true. And to be honest, that's a question which is often raised to me. Actually, I think there is no single answer. Obviously, it's a mix of different things. Maybe I could name first myself, like the other team members, whom we started this. We are all coming from the business. You know, we were all involved in market operations, in security services, in different kind of businesses, but core businesses of the bank. Even if we had, and so most of the time also a personal interest into cryptocurrency, or even personal trading experience in cryptocurrency, our job at the time were really on the front side in capital market activity. So we are really coming with client interest in mind and financial questions in mind, not approaching this subject through the technology, and definitely not falling in love with the technology in itself.
There is no problem falling in love with technology. No problem falling in love.
No problem at all. No problem at all. Yeah, and it could even happen afterward. So that's maybe number one. Number two, I would say, and that again, I think relates to also the culture of the group. We had almost from the very first day access to the top management of the bank at CEO level, where we had the opportunity to really explain what was at stake, what we understood from the technology, where we could see strategic interest for the bank in going there. And I must say, having a few hours of time of the top management to be able to explain all that is of immense benefit in that phase, and it allows us to get some understanding and to go beyond the traditional stories you could find in newspaper at the time, for at least have those 6 months I was referring to at first to try and demonstrate that we could deliver something of interest for the bank beyond slides. Consultants were floating to everyone at the time, and then obviously there's also the personal network each of us has had within the bank, which facilitated and are still facilitating some market operations we are doing today.
One thing we observe also sometimes when a new initiative, which is so ambitious, emerges within a large corporation, in particular within a large bank, is that even if you have management support, it is very hard to have the agility that you need as a startup within the monster to strive and to move at the right pace. So how did you manage to do it? Did you, I don't know, open an office in a garage and you had a lot of Red Bull cans and you work by yourself with techies and no contact with the mother company? Or did you manage to keep contact with the bank, leverage their, let's say, the pros that they can bring, but in a way push back what could potentially slow you down?
Yeah, sure. I would say first and foremost, and this was very true for the very beginning, but still today, we only set very short-term and concrete objectives to ourselves, things we explain to the management, which make each time baby steps, but very concrete ones and, very execution-oriented to make sure that we do not construct a big cathedral, with long developments which never happen, but also gives a lot of opportunities for different people everywhere to unplug what you are doing. So short-term, very concrete deliverables, and then it's true. Operating in an environment which is maybe not as rigid as the rest of the more mature operations, recognizing at the level of the bank the experimental nature of what we were doing at first, and then setting the right framework with the right risk limits, with the right boundaries in what you are allowed to do or not, and expanding these limits with time as you convince through what you have delivered. It's probably a good way to progress, and this led us, like 2 years ago, to creating a dedicated subsidiary of the bank, Société Générale Forge, to host this type of initiative in a more controlled environment, in a regulated environment, because Société Générale Forge did apply for some licenses to the French regulator to be able to operate crypto services in that field, but we'll talk to that on that a bit later, I guess, in a way which makes everyone comfortable, clients obviously, but also the bank and the regulator when we are proposing to the market security transactions purely and only on digital assets registered on public blockchains.
So we're going to jump actually into the specific capabilities and features that you are building, the ones that you already provide. Can you tell us exactly what it is about? And also, at the same time, answer the question of whether your ultimate secret goal is to cannibalize the current custody business of the bank.
Mm-hmm. Yeah, sure. So while Société Générale Forge, we are operating 3 types of services, I would say. On the primary market, we help issuers to issue securities as native digital assets, predominantly on public blockchain. So it's a structuring and issuance service we provide to these clients. So it's mainly financial institutions or corporates as we speak. The second pillar for us are what we call liquidity solutions. It's both secondary market solutions to basically transfer these securities with the same standard as we know in traditional markets in between different investors, but also refinancing solutions and repo solutions, collateral management solutions for these digital assets. And pillar number 3 is crypto custody, which is obviously also an enabler for the 2 first pillars. I should stress, because we often have the question, the mandate we have as we speak is to operate strictly in the field of security token. So we do not provide those services for cryptocurrencies, and notably when it comes to crypto custody. And the second part of your question, sorry, about cannibalizing some businesses of SocGen. Well, that's clearly also a question, but the stance the SG Group has, and that applies across all our businesses, is as much as we can to be on the innovation front and leading innovation in capital market generally. So if at some point we have businesses and some operations we do as of today under a certain format, traditional custody for the subject which is discussed here, and tomorrow we see opportunities in doing that another way through crypto custody, we prefer to embrace those evolution and to possibly lead that, rather than to wait and to suffer any external constraint for that. So we We are conscious that there might be divergence at some point, but as of today, we are partnering with our colleagues within the security services field. Security services is anyway things we have to rely on to offer, tax reporting, for instance, to our clients when it comes to their digital assets. So as of today, it's more collaborating and trying to adapt our security services and for our security service to be able to offer also crypto custody services to our clients rather than organizing, internal competition in between two entities of the SG group.
It's perfectly reasonable. And, you've mentioned before that you have decided to target public blockchains. This is quite daring. I would say that many banks have not made this step just yet, but you've actually moved one step further, which is to work with decentralized finance, to at least experiment. I don't know if it is productive or an experiment. You will share this with us. But are you alone on the market doing it? And how did you manage to get this working both technically and from governance point of view?
Yeah, it's true. And on the first part, working on public blockchain, I think this relates most to a very strong conviction we had with the initial team with whom I started this journey, which was, and again, digging into blockchain from an intellectual perspective, I would say at first, I think was a kind of eyes opener at some point with, again, this conviction that revolution, I would say, in capital market could only come with public blockchain technology. Often we do, this parallel in between internet and intranet, public blockchain being the internet and private blockchain being a network like another, but more like the intranet in the communication space. New businesses, new business models, and the internet revolution came obviously with the internet. I strongly believe this will be exactly the same for blockchain technology. And coming back to my initial story about the very first days of Société Générale Forge, actually the kind of deal we had with the top management of the bank for these first 6 months was basically to go as far as we could in terms of technology and regulation, and working backward to really capture the maximum effect or benefit, I should say, which could be achieved using blockchain technology to get real KPIs, and so to know if all this story and all these transformation would be worth going through. Actually, this first pilot transaction we did with the covered bond we issued in 2018 proved to be a success and comforted us actually in this conviction. And later on, actually last year, when we decided to study, apply, and develop some refinancing and collateral management solution for digital assets, obviously leveraging developments or solutions which are available in the crypto industry through DeFi solution appeared to us like very interesting, very promising in terms of benefits it could bring both to the bank and its clients for, again, collateral management, refinancing, and so on. So we are agnostic again to the technology and this solution. We are just looking at this as bankers and keeping in mind what do interest our clients, speaking a lot with our clients as well, either on the issuer side or the investor side. And if all this can be managed and developed in full compliance with regulation and internal rules which apply to us, bringing, really clear value added to the client or the bank. Well, again, we remain agnostic and happy to make this kind of move.
Jean-Marc, can I ask you to be a bit more specific about how DeFi is actually helping you in this transaction? What is it doing? Is it just using a basic smart contract, or is there real business value out of it? What does it bring concretely?
Right. Maybe I can answer just by giving a few reference points when it comes to, for instance, collateral management. If you take a traditional security, which has to flow through various intermediaries and being handled in a central depository at some point, when you have a financing which is secured with such a security as collateral, and you want to adjust the collateral level based on some market stress test and change in values and changes in risk management parameters you have a full chain of operations to conduct. Sometimes you have some legal doc to adjust, and at the end of the day you have operating teams, different middle offices, sometimes in between three institutions, collateral management agent, the lender, the borrower, which have to adjust themselves on the same parameter to, at the end of the day, move one security from one account to another and make sure that the level of collateral remains appropriate in front of the amount you would have lent to the lender. If I take the example of the OFH token, the covered bond, the very first one we issued in 2018, that's operations we do within Société Générale very regularly. It takes everything as just described. It takes in between 3 days to 1 week to adjust the level of collateral. If you are even under normal market condition, or as you can imagine, under stressed market condition, let's say 4 days in average to move or to adjust the collateral is really, really long time. Plus all the inefficiencies which occurs to that, plus under really stressed market condition, probably some risk that what you would have written in a paper somewhere in a contract actually is not effectively implemented through the chain. If you create a digital security which sits on the blockchain, full digital, and you wrap this security into a second layer of smart contract, which would actually entail or embed the terms of the collateral agreement, and you give enough autonomy to this second layer of smart contract to execute itself, because this is in itself a contract signed in between the borrower and the lender. You can have self-execution of the collateral adjustment, the margin calls, and levels to which we are with the kind of DeFi solutions we are like experimenting today at SG Forge, make that this collateral adjustment could occur nearly every 30 minutes. So you move from 4 days to 30-minute collateral adjustment. What does it mean for the client? Because of these inefficiencies, because of this delay in adjusting the collateral, all market transactions today are structured with what we call the over-collateralization. You post more collateral than what is strictly needed for the transaction to absorb as a buffer this delay and potential stress test you would not be able to operate. This translates in more collateral being freezed for the same amount of financing. If you move that on chain, you reduce by a very significant amount this over collateralization, which means for the client more money for the same level of collateral. And I can dig further. There are many other benefits in terms of risk parameters and even financial terms, more money for a better price for the client. And that's typically what we are trying to achieve with this type of solutions. Again, keeping full compliance with the regulations and the risk rules we have in the banking industry.
This is really impressive. Do you see other aspects where DeFi may help in the future? Maybe not today, maybe which would require compliance or regulatory clarity, but do you see other forms of smart contract interactions which could benefit what you're building today?
Mm-hmm. Yes, clearly, and this we all know it's a long journey, but we start to see among financial institutions, and I think the level of maturity has really increased over the last few months, 2 years, let's say, among financial institutions, banks in this field. And yes, clearly we can see many other benefits. I could name, for instance, market making, liquidity solutions, clearing, netting. That's operations which are necessary to financial markets and which need to be performed in a very efficient and secured way to ensure the security, the integrity of the market transactions, but also just the service to client, which are sometimes still quite inefficient the way they are performed today. For some of them, very expensive and very long. If I think everyone moves or some market participants move to this type of solution, we can definitely achieve great things for clients and for the banking industry as a whole.
Makes perfect sense. Can you tell us a bit more about how you're trying also to standardize the market from a technology point of view? I know you have, for instance, defined this CAST framework, CAST framework. And can I position this question in the context of the many initiatives that are popping up on the market also by small startups which are trying to get to emerge in this field? How do you see that you are going to be able to define a framework which is going to be used also outside of Société Générale and Forge?
Yes, sure. Well, first, I should have mentioned that in the journey we are making at Société Générale and Société Générale Forge, since the beginning, the very first day, we are only working on the basis of real market transactions. You know, no POC, no technical pilot or things like that. Only true market transactions, because you need to really intricate legal, client demand, financial structuring, and technology. If you miss one of these elements, sometimes you may miss something big in the middle. So only real market transactions and of increasing complexity. And going through that journey, it appeared to us very quickly that we needed a common language to talk with our clients, with the issuers, with the joint lead managers who are involved in such transactions. If I take the example of the European Investment Bank digital bond issuance we performed last year. We helped the EIB to issue a 100 million euro unsecured bond on the public Ethereum network, and this transaction has been settled using a CBDC, a central bank digital currency that Banque de France issued also on the Ethereum public network for 1 day. It was an intraday try, but obviously, when you perform such a transaction, you need to speak the same language in between the joint lead managers, Goldman Sachs, Banco Santander, and Société Générale, were involved for placing this bond to clients. And clients here were mostly asset managers, European asset managers. And these asset managers needed to be able to digest the security token into their existing IT systems, because obviously no one's do want to spend 1 million euro to do IT developments client by client to be able to integrate in their own IT system a new token coming to the market. So you need a common standard, you need a common language. So and that's all the story behind CAST, which stands for Compliant Architecture for Security Token. It's actually an operating standard. It's not that much a technical standard, but it's a common language. It's business rules which are needed for financial institutions and their clients, and sometimes also the regulator, just to know how to perform a transaction on the primary market, on the secondary market, on any kind of market transaction based on blockchain technology. Because you cannot just do a copy paste of, let's say, the rule books we have within each banks to perform a transaction when you go to the blockchain. Going to DLT at the end of the day is to make things quicker, cheaper, simpler, and so sometimes to shortcut some operations we have, sometimes to remove some operators we have in the traditional market infrastructure. So you cannot just do a copy-paste transaction. People tend to forget it, but when you sit on a trading floor, when you sit in a structuring team, whatever the bank, everyone knows without explaining how a transaction do work. You know, you start by step 1, then you go to step 2, and so on. Again, when you go to blockchain, it's not exactly the same. So beyond technical standards, beyond data formats which need to be agreed, you also need these new kind of rule books to perform a transaction. And that's what we put with time, transaction after transaction, into CAST. And it's an open source framework. It's an open source standard. Everyone can use it. And we are also and already seeing many other financial institutions using this framework, because again, it needs to be shared, and no one has an interest to keep it private. Everyone has an interest to make it as broad as possible and to enrich it with time. And once you have an enrichment, and that's very common in the crypto industry, but not that much in the financial industry. But I think there is clearly benefits of sharing these best practices across the board.
Is this framework very France-specific, or is it jurisdiction independent? Would it apply in North America, for instance, or only in Europe? How would you qualify it in terms of universality?
Yeah, no, it's really mainly business rules. So it's agnostic to the technology first. It applies whatever the blockchain you are considering, but it's also agnostic to the regulatory framework under which you are operating. Which is also a key element, because building blockchain transactions and CAST, one of the main reasons why clients are coming to this technology, without making a too long digression, because blockchain do also offer them a truly global market infrastructure. The ability to access global liquidity pools, to place or to sell a financial instrument anywhere in the world, and on the other way around, investors from everywhere to invest in that. So all this to say that it's necessarily a global market infrastructure, so it needs to be applicable from everywhere in the world, whatever the jurisdictions, because we know every country will probably have its own interpretation, its own rule when it comes to legal framework, distribution constraints, and so on and so forth. But the financial industry needs to remain global and interoperable from everywhere in the world, and that's why we have built this framework this way.
Excellent. And then one thing I wonder, I don't know if it's a tough question, but I will try it. You mentioned that you use today Ethereum as a public blockchain. Mm-hmm. And as some of the participants in this call may know, when you execute a transaction on the Ethereum blockchain, you have to pay fees. And these fees are actual cryptocurrencies denominated. So it's Ether. Sure. So I've faced a few banks that were actually annoyed because they wanted to be able to operate tokens and tokenize, not being exposed at all to cryptocurrencies. So how are you dealing with this? Are you externalizing, or are you allowed to touch cryptocurrencies for these small amounts? What is the strategy?
Yes, no, clearly, I'm very aware of this difficulty sometimes. So as we are concerned, we do own Ether, and we pay gas fee with that. We went through lengthy discussions with the regulator and our own risk management teams to understand and to decide how we would do that. But the way we approached the question was to make sure we are using crypto on which we have full traceability to make sure they are clean enough. But in my view, that's you know, a kind of first way to address that. I think sensibility of regulators and risk manager on that will be loosened. I mean, will be less stringent going forward. But as we speak, that's how we do that. So yes, we do with gas. We also make sure broadcasting the transactions on the blockchain that we have the appropriate, you know, or at least transparency enough in the way the block is mined and which miner do that and so on and so forth. We are also, for some transactions which are very sensitive to this criteria, using another blockchain, the Tezos blockchain, where you can control the environment a bit better. But for all these questions, and I could name some others, each time we have found appropriate solutions to address the concerns either from the regulators or the law firms which have been appointed by our clients to check these operations, our own risk constraints we had. But you know, this is all part of what you have to build to be able to operate security transactions on public blockchain. You need obviously to deal with gas. You have to make sure the network is handling your security the right way, but you also have to make sure you have a proper continuity plan in place in case a fork occur on your security. You need to make sure that your obviously KYC and AML criteria are met at any time for such token, including on the secondary market, when a security you issue as a native security on the blockchain, as we do, is sold from one investor to another. Because just to precise, the security token we are creating at Société Générale Forge, there are true security token in the sense that we do not copy-paste a security we would have issued on the traditional market infrastructure on the blockchain. With the services we are offering to our clients, once the security has been issued on the public blockchain, this is the only security which do exist, and it's the full security and the entire security to grab the benefits of full digitalization. So this means that you have to ensure that, again, KYC AML is fully enforceable, but you also have to ensure that potential sanction and embargo procedures are fully enforceable on public blockchain, and so on and so forth. And that's where you start digging into more complex questions. You need to tackle one by one to offer this type of services to your clients.
You mentioned before Banque de France and I think the ECB. How do you see CBDC today? Is it something which will become a reality? Do you think it may actually materialize as a private form of stablecoin, like we see with USDC or Tether issued by private companies? And how do you see it can impact your operations and potentially improve yet again on some of the inefficiencies that you're facing today?
Mm-hmm. Yeah. Well, so as you know, many central banks now have engaged into concrete developments or at least experiment on CBDC question. First, we see a very strong need from the market and our clients for such a CBDC, very clearly. There is also, you know, a lot of international competition on that front, on currencies, and also obviously competition coming from the private sector. You mentioned stablecoin on that front. From the dynamic we are seeing, and as you may know as well, we are ourselves involved for quite some time now in CBDC experiments with some central banks. You named Banque de France, but there are others as well. So we are witnessing, I would say, this trend, and we're also witnessing the increased level of maturity these central banks are gaining in the field, and all the experiments are moving from the one to another, exploring different fields each time. So I strongly believe that we will have a CBDC one day, sooner rather than later, and definitely sooner than most of the people may think. The ECB, for instance, already made multiple times announcement that they will start a first digital euro prototype as early as next year, with the goal potentially to deliver a true digital euro by 2025. So it's pretty short term when you think about it, especially when you consider the impact it could have on financial markets, but also on cross-border payment, on retail payments. But again, needs are there, either for what we call wholesale CBDC, meaning CBDC which will apply for large cash transaction, especially within the banking sector, but also for retail CBDC, small payments. There are clearly needs there as well. So yeah, I'm quite confident that this will occur, and that we'll see very innovative developments coming in the few years ahead of us on that front.
Jean-Marc, I have a last question for you. As you probably see on the market, several banks are today trying to build or succeeding in building tokenization infrastructure and crypto infrastructure. Do you see them as competition, or is there more a collaboration angle to it, where potentially multiple banks can reach the same standard and leverage the clientele they already have? Would you be open to collaborate with other banks doing something relatively similar?
Yeah, clearly today we are in a co-opetition mode, I would say. And again, I mentioned the EIB, the European Investment Bank transaction before. That was clearly the case. We need to collaborate among banks, first because, again, the banking industry and financial sector is all about interoperability. Tomorrow, a security that would have be issued with Société from a client with Société Générale Forge will need to be probably custodied into another bank custody service. So we need interoperability, and for that, there is no better way than working together on real projects. Then at some point when there will be more maturity, obviously competition will come again. My only guess there is that we'll probably see less players on a global basis. I mean, at this scale, that's what we have today. Already today, even without speaking about blockchain and DLC and so on, there is already a very strong need and sometimes incentive from some regulator for more banking consolidation on a global basis. We already see that today. I think blockchain and DLT creating a truly global financial market, either for security or cash, will even accelerate this need or this trend for consolidation.
Jean-Marc, thank you very much for this discussion. It's fascinating, and I hope we have a chance to follow up on this maybe on METACO Talks. Thank you also all for attending. I hope you enjoyed this session and that you will join us over the next episodes in a couple of weeks.
Thank you.
Have a great end of the week.
Thank you, everyone. Bye-bye.